Raamdeo, why do you think OMCs can make money?
They are making money, and you've seen the best result of the quarter has been from an OMC. And see, it's a consumer company basically. You need it 365 days, 24/7. So, one of the things was that unfortunately between 2003 and 2012, 13 or 14, the oil prices went up and government decided to come in front of the oil price and gave subsidy and at the cost of the entire fiscal balance. And actually one of the biggest differentiating things this time when the recovery is happening is that government is not giving subsidy on the oil, and hence their fiscal is real. I mean, if they're saying 3.2, 3.3, it's approximately that much, unlike what happened in 10 years back. So these companies, and if you see the statements by the government, they want to stick to the policy, whether the oil is 80, 90, 100, 120, whatever it goes to. Demand is going by 8-10%. Margins are pretty stable at about 2-2.5%. Stocks are about 6-7 P multiple with 4 or 5% dividend yield. I mean, I have not seen anything like this in a 25 P market when people are not finding stocks. At 7 P, you're getting 3-4 of them just like that on the road. So we made a lot of money in last 3 years. So now after making money, still it is at 7 P. That's the funny part. So I think people have made too much money too quickly. They don't want to make more money out of this.
But irrespective of the recent correction, would you say that investors need to still be wary and there could still be accelerated selling even in the pipeline for PSBs?
So long as it is not systemic problem, it is only one branch, one bank. Of course, it's a large problem. It's for the entire asset category. It has been classified as a big red flag. But I think as the time passes and the system says that no, it's a problem confined to one branch of a bank, then of course the markets will get reconciled to that.
Do you think insurance is the sector which is at the stage where private banks were, let's say, about 10-12 years back?
Yes, so this value migration of from PSUs commanding heights of 80-90% share or almost 100% share to more like 60 and then 50, that process is still on, and that is on in say even in mutual funds. I mean, UTI was the only mutual fund company till about 92, and then the private sector started coming in. Now you see bulk of the mutual fund is in private sector, and that to domestic private sector. Even foreigners have fled from here. So same was in if you look at insurance, private insurance, and in, life insurance, general insurance, and banking of course is happening. So wherever there was a 100% monopoly in the financial sector, whichever segment, I think it is giving way to more efficient, newer business model from private sector.
Can you speak about mutual fund flows? Are you getting a sense that mutual fund flows could now be sticky given that markets are no longer in this free-flowing mode?
Till February, we have got very healthy flows, and recently in the month of March, more in the second week and all, we have seen some slowdown. But I think broadly, I'm meeting investors day and night. I don't see any concern. In fact, they're looking for opportunity to put more money if the market corrects a little bit. So I think on the whole, the investor sentiment is very positive and very stable. So I don't see any impact of this entire thing any significantly on the liking for equity and the mutual funds.
What do you make of the pace of the rally? I mean, we are up 6% in this year. In dollar terms, it is about 7%. It is 8% for the emerging markets. Is this speed slightly scary?
The moment I saw the IIP of more than 8% for December, it was very clear that things are healing, and it has probably now finally we are out of the all kinds of downdraft effect of demonetization and all. And global economy is growing so robustly all across. I mean, even Japanese export growth is more like 9%. So Europe is doing well, Japan is doing well, China is doing well, America of course is on a full blast. So India just about at the cusp of happening. I mean, getting the growth back from 6-7% to 8-9%. So I don't have any doubts that this quarter itself will have good start of the momentum, and it will pick up as we go along.
Right. Mr. Agrawal, do you think markets are prepared for any changes in LTCG and can STT as well as LTCG coexist?
See, right now the whole mood in the world is to reduce the taxation per se, fundamentally, because compliance improves and the economy also gets a boost. That's the trend set by America right now. Now at our end, I mean, this long-term capital gains tax has been discussed many times, but I mean, even if you put it, how much can you put it? Short term itself is 15, so you can put at best 7.5% or something like that, which is not. I don't see that to be impacting anybody that much. But if things are working very well after so many years, we are getting a good inflow into formal economy, and from here the money will go to the private equity or the newer firms, real economy. So I think authorities should be very careful in tinkering with the current regime.
The world's read the Berkshire Hathaway annual letter of Warren Buffett, famous letter which came out over the weekend. And Raamdeo, looks like Mr. Buffett is taking both the sides. One side is insisting that we should not compare bond yields with equity yields, but on the other side he's also sitting on $100 billion of cash now.
So actually I was reading yesterday and I found that the very first page, out of 53 years of his activity, I think he took over in 1965 and till now. So in 53 years, he has outperformed in 34 years and he has underperformed the market in 19 years. And actually, if you see the performance of his the entire company, the book value has grown at 19% and stock has grown at about 20%. And index has grown at about 9.5%, 9.9%. So it's been an amazing journey. Even last 5 years, he has handsomely beaten the index. So the old man is still full of vigor. And coming back to your question on cash and investing, he's sitting on $116 billion of cash, and he doesn't seem to be in a hurry to buy, because he's saying that last 1 year there is a literally drought of investment. They've gone through all the proposals, potential candidates, but I think just about because of the price, they have not been able to buy anything. But at the same time, he's also bullish about American equities, and he says so long as the bond yield remains low, it looks that stock as a whole is going to be more attractive, and there's a tailwind on the back of American equities. So it's like a contrasting, sitting on cash. I mean, if you look at what he's doing, he's not buying. But if you look at it as wise, he still favors the stocks.
Raamdeo, in the past you've owned the Berkshire Hathaway stock and you've sold that stock because if Berkshire Hathaway is sitting on so much of cash, obviously it will have an impact on the return on capital and return on assets. And I think that is what Buffett is again pointing out too, that he expects a drawdown in the Berkshire Hathaway stock. I mean, frankly, I've never seen a chairman talking about his stock and where he's actually giving a profit warning to his shareholders that don't expect great returns in future because I'm sitting on a lot of cash.
Yeah, but I think the stock has done amazingly well. I think it has done about 18-19%. Last year itself it has done 21% with the market. It was with the market, but I think in the last 5 years, except 1 year when there was a little decline, I think it has done about, my sense is compounding would be anywhere between 17 to 18% or maybe 19%. So stock has done very well. The earnings, actually what has happened is stock is re-rated. The earnings growth has been 9-10%, but the re-rating of the P multiple has been quite staggering. So in my assessment, when I was saying 9-10% kind of a long-term growth, from 9-10% top line sustained growth, very unlikely that you will make 20-25%. But obviously I was wrong in last 3-4 years. Stock has done very well at about, and particularly this year because of this tax write back, the stock has done very well. So it looks that the stock will keep doing well, reasonably well, because they've got so much of purchasing power. And you see the aggression in the insurance. The one single deal he has done of $20 billion reinsurance, and with $10.5 billion of insurance premium. And of course it must be a 20, 30, 40 years kind of a policy. but still the size is staggering. It is probably the world's largest single reinsurance deal.
As Indian investors, Raamdeo, what can we derive from the non-insurance space?
Yeah, I think in India, one of the biggest opportunities is the not only the quality of business, but quality with growth. I mean, because the underlying economy itself is has so much of potential to grow. I mean, your 6% is recession, 6% growth in the economy is a recession, and now we have attained a large size also, $2.5 trillion of economy. So when you grow at about 7, 8%, 9%, even if 7% compounded for next say 10, 15, 20 years, I think the amount of growth potential of all the good businesses, even if it is a bank, if it is NBFC, insurance company, asset management companies, your non-finance companies like all the consumer companies, auto companies, you know, I mean, the auto penetration is nothing. I mean, even with the huge penetration of motorcycles and scooters, you see the industry growth is about 14% volume this year. So I think India has a huge potential for well-run businesses in most of the fields. Figuring out, you know, which company has underlying good business and good management and the potential of growth at reasonable price. So this, I mean, almost like I am saying that QGLP, the format, and then seeing where is the potential. Clearly, the prices are a little expensive right now, but of course, that will to some extent dampen the near-term return. But I think somebody who is buying for about 5 years, I think there is a still decent return to be had.
As we conclude this conversation, what would your derivation of the letter would be? The fact that he's talked about cash piles swelling, the fact that he said there are fewer suitable buyouts right now in the market. He's cautioned that Berkshire shares could see a sharp drawdown. Would you say that he's somewhere hinting that keep some powder dry on the sidelines because valuations are looking expensive?
See, two things. One is that he's clearly saying that valuations are expensive. That's why he has not been able to use the cash in last 12 months. Clearly, that is one message. So you be on the guard in terms of valuation, which is the underlying theme in India also. And I think it is part of the global equity theme that generally equities are expensive. And one of the reasons is because the bonds are very, very low in the yield. And somewhere, I think by holding cash and not participating in the market aggressively, the message is very clear that, and he has been wrong for a very long period in terms of holding the cash for a long time. But he is very clearly saying that when the world is not conducting their affairs with prudence, we must conduct our affairs with a lot of prudence. So I think it will be ultimate test of patience for the so-called value investors who are holding back on the purchases because how long. But my sense is that if so much of money is sitting on the wings, I mean, it could be a value trap. I mean, it could be a valuation trap for very long term to come in the market, and you have to go on. I mean, I am following again him, Buffett only, that don't time the market, go ahead and buy whatever you understand and with little lower expectation in the marketplace.
Okay, Raamdeo, pleasure having you on the show today, and thanks so much for taking the time.